Hello and welcome to the day ahead. It is Friday, May 6th. I'm Andrew Gagan. Let's get to the action overnight. US equities plunging as investor sentiment cratered in the face of concerns yesterday's 50 basis point hike from the Fed won't be enough to tame runaway inflation. All three of the majors ending the session sharply lower, with the tech-heavy Nasdaq the worst hit as traded headed for the exits. The volatility index soared with focus now firmly on tonight's non-farm payrolls number for any clues on labour market strength and its impact on monetary policy. Looking ahead, market participants now raising bets of a 75 basis point hike at the next Fed meeting in June. To the earnings, and Jack Dorsey's block plunged to a first quarter loss as demand for Bitcoin came off the boil due to a decline in cryptocurrency prices. Bitcoin revenue more than halving in the period as the euphoria subsided after last year's frenetic rally, which was fueled by growing mainstream acceptance of cryptocurrency and favourable tweets from Tesla chief executive Elon Musk. Now, speaking of Musk, the tech tycoon revealing overnight he has raised more than $7 billion of the funding for his $44 billion takeover of Twitter from investors including Oracle co-founder Larry Ellison and crypto exchange Binance. This amid reports Musk is expected to take the helm at Twitter temporarily. Well, Tesla shares dropped some 8% in the overnight session, while Twitter was a rare bright spot. On the currency front, the US dollar hitting a 20-year high against the majors as the savage sell-off on Wall Street boosted demand for the safe haven currency, as the Fed Reserve is seen to be tightening monetary policy more aggressively than its global peers. The focus for investors now is US inflation data for cues as to the Fed's next moves. In other data, unemployment claims rose more than expected in the past week to 200,000. Unit labour costs rose more than 11.5% in March, while non-farm productivity fell 7.5% in the quarter, which was more than forecast. To the UK, and as expected, the Bank of England lifted its key bank rate by 0.25% to taking it to 1%, warning that the economy is at risk of recession, with the statement indicating a sharp slowdown in growth and a contraction in activity for most of next year. This as Central Bank Governor Andrew Bailey warned inflation would peak later and last longer.
In the MPC's central projection, CPI inflation is expected to rise over the remainder of the year, averaging slightly over 10% at its peak in 2022 Q4. The majority of that further increase reflects higher household energy prices. The price cap mechanism means that it takes some time for changes in wholesale gas and electricity prices to be reflected in retail energy prices. That means consumer price inflation is likely to peak later in the UK than in many other economies, and may therefore fall back later.
And the euro fell on German data, which showed industrial orders in March dropped sharply. The Aussie dollar tumbled around 2% from 72.5, and the risk-off move in equities was even more pronounced in cryptocurrencies. Bitcoin having lost around 10%, with many of the leading altcoins down similar amounts. Well, bringing it back home, and that massive sell-off on Wall Street expected to be a harbinger for the local market. SPI futures, that is actually down around 1.5% at this point. On the commodities front, as expected, OPEC Plus nations agreed to raise June production by 432,000 barrels per day as they unwind the restrictions imposed as COVID cut demand. The cartel and its allies also making allowances for European plans to restrict Russian oil imports. Brent crude up 0.7% to $110 a barrel. The iron ore futures price rose 1.7% to $145 a tonne. Base metal prices were mixed, while gold futures rose 0.4% to $1,875 an ounce. Just quickly looking at the day ahead, the RBA back in the spotlight, releasing its statement on monetary policy, with all eyes on the updated economic forecast. This after the central bank hiked interest rates for the first time in more than a decade earlier this week. And on the corporate calendar, Macquarie hands down its full year numbers. The market mixed on expectations, forecasting a relatively robust report, however warns profit growth won't be sustained into financial year 23. And that is your day ahead. See you again Monday.